Thank you so much for such a wonderful announcement. It's great to be here, especially after the discussion about Korean market for stablecoins. So we're going to talk about very similar things. We're going to talk about institutions. We're going to talk about regulation. We'll talk about use cases. We'll probably talk a little bit less about AI in this panel, but definitely it will be an exciting panel. And just before starting, I got a really great and detailed introduction from our event host here. But maybe we can do a little round of introductions because all our panelists actually have very multifold backgrounds that led them to stablecoins. And maybe if we can start with Shimoda-san.
Thank you, Na. Hello, everyone. It is great to be here. My name is Naoto Shimoda. I spent a little over 30 years at the Central Bank of Japan and the Ministry of Finance. And now I lead Digital Assets Initiative at SMFG. A long-established, kind of pretty traditional financial group with the second largest bank in Japan in it. Part of the work that we are doing right now is to explore the benefits of stablecoins and other digital assets in collaboration with a lot of stakeholders, including the SBI Group and Apple Labs and Fireblocks and so on. And this is because we are seeing unmistakably rising interest in those assets by our clients, corporate clients in particular. So it is an exciting time, even for traditional banks like us. Thanks.
Thank you. Fernando?
Yeah, I'm Fernando. Actually started my career in the 90s. I used to be a crypto punk. I don't look the part anymore with this suit. But that aside, I joined Chainlink 3 months ago. I'm the president of capital markets, and we at Chainlink secure more than 8 billion worth of stablecoins with features like preferred reserve, secure maintain, and you name it. Before that, in my previous role, I was the CEO of SBI Digital Asset Holdings back in Tokyo. And again, back then I helped a number of Bitcoin issuers and foundations to issue stablecoins in Japan. It was pretty painful. Maybe we get to discuss that today.
Absolutely. We'll talk about how you brought Circle to Japan. Yes. And Taishi?
Yeah. Thank you for having me here. I'm Taishi, the co-founder and CEO of DeFimans. After working MUFG Securities as a derivative marketer, I was working for a tax and accounting firm as a tax and accounting consultant. Then I dive into crypto because when I saw the DeFi's growth, especially for a Uniswap and MakerDAO Compound, I felt really excited and joined this field. Yeah, and after doing a couple of tradings, I founded DeFimans, which is a crypto and blockchain focused consulting companies based in Japan. And last year, maybe last June, my SBI DeFimans was fully acquired by SBI, and right now, actually, I'm driving SBI's crypto-related projects, and there are a couple of crypto-related projects apparently. And actually, really happy to meet Fernando again here. Yeah.
Great. And Tony?
Hi everyone. It's great to be here. My name is Tony McLaughlin. I spent 30 years working in traditional finance institutions, including 20 years working for Citibank. I've worked on every kind of payment system. And the reason why I resigned from Citibank on Christmas Eve is because I became convinced that all of those legacy payment systems can be replaced by tokens on public blockchains. So I'm here because tokens on public blockchains are a general purpose technology, and if given half a chance, general purpose technologies, they replace the special purpose rails. So we're in for a big transition, an exciting future. Stablecoins, tokenized deposits, tokenized money market funds, and other assets on public blockchains represent that future.
This is interesting, and it's very similar actually to the path that Shimoda-san took, also 30 years in traditional finance. And I'd like to start this actually panel with the first address to him, asking exactly the same thing with the legacy systems, with old centralized banks. What is it like to bring this new technology, to start talking about blockchain, specifically working with SMFG, right now, which was the pivotal moment that led your group to decide to look into this, and how do you overcome some of the challenges of the legacy systems with your work?
Thank you for the question. Regarding our project on digital assets, as a matter of fact, there is a lot of discussion going on as to how we should proceed and where we should be focused. But one of the things that I'd like to do is to explore the potential of blockchain-based tokenized money, whether it is stablecoins or tokenized deposits, to modernize traditional finance, rather than just focusing on crypto-native use cases. There are a number of reasons. We are a traditional bank, and traditional financial market is 100 times larger than the crypto market. And most importantly, clearly, TradFi has pain points. A typical one is sort of the inflexibility, if you will, of core banking systems. They deliver strong processing performance and security, supporting a huge number of transactions. However, access is limited, and updates require always significant time and cost, which is making it hard to quickly adapt to evolving clients' needs. This is where I see an opportunity for blockchain and tokenized money to drive efficiency and fulfill currently unmet clients' needs. In my mind, building a blockchain system only loosely coupled with the core banking system would make it easy to achieve, for example, 24/7 operation and higher connectivity to corporate ERP systems and AI and greater programmability. This is one of my expectations around stablecoins and tokenized deposit. And amongst multiple forms of tokenized money, I'm currently leaning towards the idea that stablecoins opportunities should be explored before tokenized deposit. Tony might have different views on this, but one reason is cost and time to market. Tokenized deposits, by definition, require deep integration with core banking system. Therefore, it entails way more time and expense than stablecoins. Another reason being that stablecoins could go beyond the KYC boundary of each bank if you choose such a design, and therefore represent less fragmentation issues. So we will be verifying those hypotheses around the advantages of stablecoins while continuing to explore the benefits of tokenized deposit at the same time.
I would actually love to hear Tony's opinion on this. So stablecoins versus tokenized deposits for different use cases, from corporate treasuries to actually end users. What's your opinion on this? Which one wins, in your opinion?
So these tokens on public chains are remarkable things because they can represent whatever we want them to represent. And money is a claim on an issuer. So a stablecoin is a claim on, at the moment, a claim on a non-bank. And that claim is fully collateralized because we expect that issuer to have 100% reserves. A tokenized deposit is a claim on a commercial bank. And we don't expect the commercial bank to have 100% collateral because the function of a commercial bank is to create risk assets. It's not a bug of the system that they're fractionally reserved. It's the feature of the system. A CBDC is nothing more than a claim on a central bank. So actually, they're all stablecoins. Stablecoins issued against a non-bank, fully collateralized. Stablecoins issued against a bank, not fully collateralized. Stablecoins issued against the central bank, backed by the full faith and credit of the sovereign. These things are the same. They're promises to pay. And they're specifically promises to pay that need to be redeemable at par value on demand. Now, they will coexist and they will find their different purposes. if you are in today's world, if you're buying a company for $1 billion, you don't use PayPal for that. You don't say, okay, I'll send you $1 billion on PayPal. So each payment instrument in today's world and in the future world finds its own use cases. And so it will be for these instruments.
Maybe one comment you don't mind. Actually, I always tell my guys that both of them are cash on chain. Or maybe you can use the word, when you might want to use the word stablecoin to refer to both, right? I think cash on chain is more generic. And asset managers are going to be playing a big role when it comes to, what we are calling here stablecoins. So for distribution, they might be using the likes of Coinbase and other VASPs. And when it comes to tokenized deposits, the distribution channel is commercial banks. And I would argue that the banks, long term, are going to be focusing more on the tokenized deposits use case. The reason being that when you're talking about stablecoins, you might see outflows from deposits into money market funds, which is the underlying of most stablecoins, right? So again, I can see the banks being a bit conflicted. Because again, the more deposits they have, the more balance sheet they have, the more they can lend out to potential customers, right? So again, that's my thesis, Shimoda. Maybe.
So you don't think the bank-issued stablecoins will be the future of payments?
I think they might run into internal, pushback, right? Because look, all these deposits now are going to stablecoins, right? And our balance sheet is shrinking. So I would love to see how that plays out.
Shimoda-san, do you have a comment on that?
Yes. What I like about stablecoins is its sort of flexibility of its design choices. If you confine access and limiting the composition of the reserve assets only on bank deposits, stablecoins can be structured to replicate exactly the economics of bank deposits, even support credit creation. So, for banks like us, traditional banks like us, it might be prudent to start with such a, deposit-like stablecoin while retaining the optionality to adjust access and the composition of reserve assets over time. That's what I'm thinking.
Okay, great. I would love to hear this opinion from Taishi as well, because Taishi, you're part of the SBI group right now. SBI Holdings is one of the biggest financial institutions in Japan and maybe the world. But you also work with some smaller companies as well. So what is your opinion on this, specifically on tokenized deposits and also bank-issued stablecoins versus decentralized versus centralized stablecoins? Because you work with different layers of decentralized finance.
Yeah, I personally think bank issues like centralized stablecoins and decentralized stablecoins and other tokenized money market funds can coexist because apparently that risk appetite of retail users are quite diverse. For example, lots of high frequency trader want to take a risk as well as simultaneously earn some yields. Then those kind of traders are apparently using, for example, yield-bearing stablecoins such as Ethena or something else. And for others, for example, in Japan, due to the tax regulations, lots of BTC whales or some couple of crypto OGs do not want to sell the crypto, so they just deposit the smart contract just to mint a decentralized stablecoin such as USDS, former DAI, and then leverage their position. On the other hand, actually more a conservative or traditional players just want to use centralized stablecoins because in Japan and in general, apparently a huge top tier banks are apparently trustworthy and the credit rate is quite low. And simultaneously, for tokenized money market funds, of course, it's much secure, and the mechanism itself is quite similar with security accounts. So those money market funds are apparently preferred by security account holders. So the user base is quite different. So if until when the current DeFi ecosystem exists, then those those three types of like stable coins can coexist. That's my opinion.
Yeah, you started this opinion actually with discussing about the investment use case for people living in Japan, and this is also in your domain, Shimoda-san. So I'd also like to ask you, what is your opinion on this? For example, you mentioned that tokenized deposit might be a better option because also they create more yield. How do you see this evolving, not only in Japan, but across APAC?
I'm going to talk about investment, putting aside tokenized deposit and the stablecoin, discussion. I would say investment and additional yield would be an essential component of digital asset economy because many people have a craving for yield. In Japan, for example, inflation is 3%, slightly below 3%, and while government bond yield, 10-year government bond yield is 1.6%, and bank deposits pays the interest of only about 20 basis points. So in my conversations with our clients, their demand tends to skew more towards investment rather than payments. So in order to fulfill such demand, I believe for our financial group, it will be important to offer tokenized investment products which can be exchanged with tokenized money in near real time so that users can move seamlessly between cash-like instruments and interest-bearing assets. And then can make an investment on an hourly basis instead of currently possible daily basis. So in my mind, more efficient payments, made possible by tokenized money is only one side of the coin of what we are doing. And the other side, which is even more important, is additional yield, additional return arising from tokenized investment products, perhaps ranging from money market funds to higher yield products. Both of them should go and come into reality side by side.
And when this, Fernando, you have
I
a
love what you said. Actually, Shimoda-san, I would argue that that's going to drive the convergence between TradFi and DeFi. Now, we at Chainlink, we are in discussion with a number of TradFi players who are getting ready to offer tokenized securities to their clients or tokenized private credit funds. But the thing is that you as an investors, when you get this tokenized security or money market fund, private credit fund, what do you do with that token? But you look at DeFi, there are many what we call utility venues. You can use this tokenized private credit, you send it to Aave Horizon, and you can borrow stable coins right away. And you're on the lending side of Aave Horizon, you lend your stablecoin out and you get a high yielding tokenized security in return. So I think that's going to be the future of tokenization, and this is going to drive this convergence.
Sure, and this is both on the side of an end user and also on the corporate side as well. So I'd like to ask Tony, maybe if you can help us understand. We see, this conference, we talk so much about stablecoins. There have been so many corporations, not only from Korea but from the entire region. What do you think is going to be the driver that will really move the adoption or the interest from the corporations to start utilizing stablecoins or tokenized deposits in the future?
Yeah, great question. My core business for the past 30 years has been corporate cash management. So this is a use case that isn't much talked about in crypto because the crypto bros probably aren't familiar with corporate cash management. So it's not retail and it's not markets. This is large corporates like Hyundai who have got hundreds of subsidiaries and they're moving money between those subsidiaries and they're paying vendors and paying taxes and receiving money from suppliers. This is an enormous use case. Now, something fundamental is potentially about to change. The building block of those structures is the bank account. And large corporations like Hyundai have hundreds or in some cases thousands of bank accounts. Now, what is a bank account? A bank account is just an entry on a database inside a bank that says, I owe you $1 million. That's what a bank account is. It's on a proprietary ledger. So if we move from a world of proprietary ledgers to public ledgers and tokens on public ledgers, those tokens can be tokenized deposits, they can be stable coins, they can be money market funds, they can be anything that we want them to be. A corporation now has a different way of building up its corporate cash management based upon tokens in wallets. So this is fundamental. Most people, certainly of my age, if you ask them how much money have you got, they think about their bank account. I just hired a young degen, a young crypto native. I ask him how much money he's got, he thinks about his wallet balance. So the fundamental thing, I think, which is the real shift, it's not about stablecoins, tokenized deposits. We're moving from a world basically where the unit or the Lego block is the bank account, to the battle will become who controls the wallet. And this is a fundamental change in how corporate cash management can be structured. Maybe Hyundai won't have 1,000 bank accounts. Maybe they will have 100 wallets, one wallet per subsidiary. This will be much more efficient.
That's not theoretical. We are seeing demand for such a use case.
I actually wanted to ask you about this because I know that the Chainlink, you provide data for majority of stablecoin issuers. You work with data for so many financial institutions as well right now. So how do you see this?
What Tony just described is not theoretical anymore. Now we are seeing corporate treasuries of big Fortune 500 companies who have a CFO with a mandate to start diversifying and optimizing the treasury. And as part of that, they're going to get exposure to tokenized cash. Because at any given time, they have tens of millions, hundreds of millions sitting idle in bank account in Dublin or Amsterdam. In some cases, their execution broker cannot help them with on-ramp and off-ramp for the money market fund. That is an issue. But we, as Chainlink, are working with a significant number of the big money market fund issuers and a significant number of stablecoin issuers, and we're building a solution to be able to serve this demand. So you're working for Hyundai, Samsung, and you're on a big corporate treasury, we can help you integrate your TMS, your treasury management system, with this plumbing that will allow you to get in and out money market funds, for example. And I see this, as the first step towards wide adoption of tokenized securities, tokenized whatever, in the context of enterprise institutional users.
Great. And Taishi, on that note as well, on your side, what do you think are some of the use cases that SBI Group will see interesting for themselves, for their clients, and for all the holdings companies?
Yeah, this is like quite interesting question, and it's really the use case itself is quite limited due to the Japanese regulations. But currently SBI Group itself is trying a couple of things and to increase the number of stablecoins use cases. And firstly, right now SBI Group is trying to onboard like security account holders, enabling to purchase, for example, security tokens by using their own like a USDC or their own like stable coins. Unfortunately, at this moment, SBI can only have a USDC, but this will be the great first step for Japanese market to onboard stablecoin. And the next thing is that a couple of security companies provide security collateralizing loans. So, for example, if like a security account holder, like for example myself collateralizing my stocks, bonds, or funds, and borrow against the stable coins, and and like trade or utilize those kind of stable coins on chain. That would be like a quite unique use case. That should be a quite unique and new types of use cases as well.
And you mentioned the USDC's collaboration with SBI. We have Fernando who actually led that. So I'd like to ask you if there's something you would like to add to that, and maybe also, you know, just taking this as a framework of successful implementation in Asia. Is there something that?
Yeah, actually, Fernando lead and communicate with the Circle, and my team executed the integration, and but like my personal view is there should be a couple of choices to be prepared. It's not limited to USDC, but like just as like for example Tether or Ripple USD, or like not just limited to USD backed stablecoins.
True.
I think one of the pain points he actually solved, he's too humble.
Yeah.
He should be taking more credit. When this in Japan, as you look at the taxonomy, there are Japan-issued stablecoins and non-Japan issued stablecoins. And for the non-Japan issued, like USDC, even though they are collateralized in the US or some other jurisdiction, you need to go and collateralize it again in Japan. So you end up like, again, 100% over collateralization. And that's a challenge.
Yeah,
right?
what
But
we call
maybe you
double
can work
reserve.
It's like a double reserve. You want to maybe talk a bit more about that?
Like the stablecoin issuers outside Japan have to like make a reserve inside Japan by signing with a trust bank, and this will cause a double reserve issue.
And Japan is very difficult for, you know, entry barrier is difficult, regulation is difficult, but at least there's clarity and at least there's potential, and already there is USDC, there is the Japan-backed stablecoin. I'd like to ask you, maybe Tony, if you can help us understand this, in terms of regulation, to create kind of an APAC-wide stablecoin flow, let's put it this way, which would be the one regulatory change that would need to happen to make this happen on a regional basis, not just on a country basis?
Okay, there's something very peculiar about the stablecoin discussion where everyone immediately talks about issuance. But let me, I brought a prop with me. Oh, wow. This is a US dollar check. US dollar checks are not regulated in any country in Asia Pacific. US dollar checks can be processed by almost any bank in Asia Pacific. And when I walk into Wuri Bank with a US dollar check, I get a very warm welcome because Wuri Bank will charge fees and FX. So if dollar checks can be processed all over Asia Pacific and they're not regulated in Asia Pacific, stable coins can be processed all over Asia Pacific and they don't need to be regulated here. But what has to happen, well, let's not say what has to happen. What would be very, very good for banks in Asia Pacific is to process stable coins exactly like they process dollar checks. And then they will make lots of lovely foreign exchange.
This is fascinating. I had no idea.
Can I add to that? I think the reason that works is the credit rating of most US banks and the US government itself. I think with the issue with the stable coins, that in many cases they are not transparent. They're supposed to be stable, but is the underlying actually there? That's where features like proof of reserve, I think, are going to be playing a really big role. Even that is not enough. Maybe you need to secure minting to make sure you don't overmint. Hopefully, with such features becoming more commonplace, issues like those we are having in Japan for non-Japanese, issued stablecoins will go away. Because you know that.
And also, my company is solving the problem.
Thank you.
Well.
Thank you. So you might go to Delaware, issue stablecoin, and with proof of reserve, the funds are actually there. So then in Japan, you don't need to do the double reserve because it's fully transparent. At least that's my hope. So.
Yeah. About Japan, Shimoda-san, here in Japan, the stablecoins have been very successfully regulated. People really know what they can and cannot do compared to some other countries. There are, of course, many obstacles. There are many challenges to adoption. There's a lot of uncertainty, as it is everywhere else. But still, among the APAC regions, maybe it's one of the kind of fastest moving market at this moment. Do you have some great examples of why or how Japan has been able to achieve this despite a lot of obstacles on the way? And what can be implemented across the region?
Good question. Indeed, Japan enacted stablecoin legislation back in June 2023. Nonetheless, I would say there is a lot of work to do to foster innovation in the digital asset space. So I would just say at a high level that, well, you know, in driving forward projects on digital assets like ours, I do think that the most challenging part is sometimes managing legal and regulatory uncertainty. And globally, many jurisdictions have been developing their own frameworks at a different speed and in a different manner. So I would say perhaps further mutual emulation and flexibility by each jurisdiction would be beneficial to further drive innovation across this region. For example, in some jurisdictions, banks are exempted from new licenses to distribute stablecoins because banks are already heavily regulated, and obtaining a new license sometimes is a very lengthy process. So such an exemption might be, you know, beneficial, but I know it is not easy for all jurisdictions.
Yeah, we're running out of time to really go deep into this, but just before finishing, I wanted to check whether all of you agreed that stablecoins will be used as a form of investment more than actually a form of payment, or because I know Fernando said investment. Shimoda-san, you also signaled that people will look more into investment. Tony and yeah, Taishi.
Again, I consider stablecoins include CBDC and include tokenized deposits. My belief is that that general purpose technology will come to dominate every payments use case. Tokens on public networks will come to dominate every payments use case.
Taishi?
Yeah, I think the killer use case of stablecoin will be basically a trading. For example, like a trading company such as Mitsubishi Corporation, Mitsui Corporation, they have to manage tons of currency in timely, as well as simultaneously they have to hedge their own commodity positions. So so like a stablecoin technology itself will enable them to make their hedge trading much convenience. That's the first, and the second will be that after stablecoins fit the market, then I personally think that weekend forex arbitrage will happen a lot, and this is apparently a huge trading, and combining the forex market with on-chain and this will increase trading volume rapidly. So yeah, my personal view is the most largest use case of stablecoin will be a trading.
Great. Let's wait and see what happens in a couple of years. Thank you, panelists, for sharing thoughts. Fernando, you have another. Yeah. You want to add something?
No, I think when people say stablecoins, many cases they're referring to US dollar denominated stablecoins, right? So from the point of view of a Japan tax resident, USDC might look like an investment. But we've had actual JPY denominated stablecoins become prevalent, then I wouldn't underestimate the moneyness of the stable JPY. And I would say the tokenized JPY are a really good vehicle to get in and out of investments. So I think
so they will coexist in a way.
Yes. That's the way I see it. Yeah.
Great. All right. Let's check this coexisting symbiotic market in the future. And thank you, audience, for listening, and thank you, panelists, for joining your incredible insights.